So today is the day of rest, or so I thought, but the federal government actually cut interest rates today to 0%. So the Federal Reserve Bank has now cut interest rates to 0%. So what does that mean? Well, or why do they do it? Well, in times like this, people are not spending a lot of money, specifically because they want to spend it on things that matter the most, like groceries, toilet paper, Lysol, and hand sanitizer. Yeah. So a lot of people are like canceling vacations, they're canceling leisure activities, things like getting your nails done, your hair done, all of those luxuries. A lot of people are just not willing to spend their money because we don't know what's going to be happening in the next few months. I mean, with the Rona running rampant all over the world, uh, the economy and the markets are down. So investors are thinking like, hey, we're going to pull our money out because we don't want to lose money. We don't know what's going on. Schools are closing. Parents have to take off of work. Some parents are able to work from home, but it's still kind of hard when you have children there. So a lot of people may be in a position where they have to default on some of their loans or pick what bills to pay instead of all of them because of maybe their job was like, hey, everyone, we have to close up because the Rona is running around. So they cut the interest rate so that one, people would still spend money, two, so that people would not default on their loans and they'll still be able to make their payments. And most of all, so that we'll still go out and get loans. When you go and get a loan, you usually look at the interest rate, right? Well, right now they're at 0%. Well, yeah. So the lowest you'll get for a loan right now is 0%, which is usually good because that means you don't have to pay any interest on the money, right? So, what does this mean for investing? Well, your long-term stock investing, like investing in company stock, um, it's probably going to decline for a while until we can get a more stable economy. With the coronavirus just running rampant, people are still afraid to invest because they don't know what's going on. So the Dow Jones, the S&P, all of those indexes are are kind of in the negative right now. So they're, if you look on like Yahoo Finance every day, you can look at the futures and see what is going on in the market. If it's red, that means we're losing money, things are going down, we're on a sinking ship here. If it's green, the ship is, coming back up, people are investing more. So right now, what it looks like is the stock market has been down for a while now. I mean, last week, I think we had two times where they actually halted it for like 15 minutes so that people could assess the market and not just make rash decisions. So for long-term investing, I personally don't plan on investing in any new company stocks that I don't have already, because a lot of people are thinking like, oh, stocks are low right now, great time to buy, right? Not necessarily, because if the stocks are low but they're still falling, you're going to be losing money instead of making money. And then a lot of people say, well, I'm going to buy low so that when the money, when the stock goes back up, I'll make a profit. Well, the stock actually has to be rising in order for you to start buying it. So it can be low, but buy it when it's low and rising, not low and falling. So in order to know what the stock is going to do, you need to analyze, one, the charts. Two, you can look at its historical data. You can find all of this information on any trading platform. I use Yahoo Finance primarily to analyze like the stocks that I want to buy or sell. Now for trading, yes, it is a good time to invest in put options. And if you don't understand what put options are, Google will be your friend. So there are two types of options you can trade. It's call options and put options. Put options, basically, you have the potential to make money when the economy is down, like right now. And then with call options, you have the opportunity to make money when companies profit. So like when companies profit, you'll make money. But they're a little bit different than investing in stocks because you don't own ownership within the company. So you're basically buying contracts of stock and then you have the right to buy or sell it. So So anyway, the in conclusion, basically, the Federal Reserve has cut interest rates to zero. They want you to spend money, continue to make your payments, and keep the economy afloat because there may be a recession coming on. So just make sure you're spending that money wisely. But anyway, thank you for coming to my TED Talk.